started, there is a very huge demand of transformer because earlier all transformer industries were having booking order for the quarter, maximum 1 quarter. Right now, our all Indian transformer industry is booked for the 1 year or so. Now, if you have been reading the article somewhere, there is a lots of article which says the transformers in soft supply because of the capacity constraint of the Indian transformers manufacturers. So they are fully booked. And so we will get definitely all the orders, means whatever the orders we require. And we are in right time that we'll start our plant by December. We pray to the God that we will reach to the maximum level very fast, looking to market scenario. And we are working hard for that.
All right. Thank you. That's
we will reach around 10% of the Indian market requirement.
All right. And how do you see the margins going forward? You did mention that maximum it can go to 15%, but like in the near 2-3 years, how do you see that going?
See, what we expect is that margin will little bit plus on the plus side. But right now we are focusing on increasing the turnover. Margin will remain the same or maybe little bit plus side. But as the related product and assembled code sales will slowly increase, the margin will definitely improve.
Okay. And the funding for the capacity expansion was mainly from the IPO, or did we also use some debt or internal accruals for that?
No, it is mainly from the IPO.
Okay.
We are not going to take any debt for the expansion.
Okay. Thank you. That is so much.
Yeah, thank you.
Thank you. Ladies and gentlemen, to ask a question, you may please press star and 1 on your touchtone phones. We request that you please restrict your questions to 2 per person. You may rejoin the queue for follow-up questions. The next question comes from the line of Jishan Singhi from Krijuna Research and Analytics. Please go ahead.
Thank you for this opportunity. Sir, of course, I would like to ask that for the debottlenecking that you have mentioned for the core assemblies, so can you please elaborate on that?
About core assembly?
Yes.
Okay. So the transformer lamination, what we are supplying to the customer makes core assembly from that at their end. When we go for the export marketing, like Europe, America, or everywhere, this core assembly is a costlier affair over there because it requires very heavy labor. So right now we are procuring a machine which will automatically do core assembly on the machine itself, and we will supply that core assembly to the export market. This is what is our main plan for the core assembly. And core assembly is the first stage of the transformer manufacturing at transformer end. So we are moving one stage ahead from the transformer lamination.
Okay. And I would also like to know that whether do you face any competition from any foreign company based in US or Europe?
There are lots of companies who are supplying products, and competition is there, but there is always a room for the players who has the marketing skill and ability. It is not like that there is no competition. Competition is there, and we will face the competition, but definitely we will have some market share from the present market or coming new market.
Okay, so
this is what we started. Like, and right now we have around 7-8 customers overseas.
Okay. And can you give some ballpark number for the estimated market size for this radiator product?
You can say that when you do the transformer lamination business, if you sell the 10 kg of transformer lamination, there is a requirement of 1 kg of the radiator.
Okay. Okay, sir.
And export business is a huge.
Okay. That's it from my side. Thank you.
Thank you. The next question is from the line of Harsh M. from Chris PMS. Please go ahead.
Yes. Thank you for the opportunity. Wanted to understand, one, on your organization structure currently, as to how many people are there, your direct reportees in the company, and going forward, with capacity expansion, what team size you would need to, ensure that we have a good growth for the coming years?
So at present, there are 5 people who are reporting to me from the company. The mainly is our vice president, and the other people are the finance and accounts related and import. Going forward, we are going to make the full-fledged team, which will work as a team. And at present, whatever the present organization is there, few people from this organization will be uplifted, and new people will be recruited also, which is process is going on. So by the time October or September, our team will be formed for this new plant. Few from the old plant and few will be recruited. And structure will remain same. 4 or 5 people will report to me.
Okay, fine. And
two separate will be created.
Got it. And the second question I had is there any certification or etc. needed in your industry which differentiates the organized players from the unorganized? Or, what is the benefit that, you would have post adding the fresh capacities, because the size we are going is 3x. So, just want to understand that how the size will help us to get more orders, or you have some certifications which will help you to get orders versus your peers.
With this new plant, we are building up this new plant with the consultant who can get us the approval for the PGCIL. So once this new plant will be built within some sort of the period, we will apply for the PGCIL approval. And once we will get the PGCIL approval, then we will be eligible to supply a transformer lamination up to, say, 765 kV transformer. Very few in India can supply this 765 kV transformer lamination. So once this new plant will be added, this certification of PGCIL approval, we are going to apply and we will take that approval, which will differentiate us from the other peer or from the other small player.
Got it. Makes sense. And just one last question is, on CGRO's, the steel which you are importing, which is used into this. You said that you have relationships with the company. So just want to understand, this is imported currently, right? And how do you ensure that any new player will not take away market share or take away the RM? So apart from relationship, is there any other contract in place, or it is open contracts, as in when you scale, you will be able to source the raw material as well?
So with raw material like mills, whatever the mills working abroad, they are not entertaining every new entrant at every given period of a time. So like there is one Russian mill called NLMK. I tried to get material from them for 10 years and I didn't get it. And I got when they have started units in India. Earlier from Russia, I was not able to get the material. So this is how it works. In abroad, your long-term relationship always count, as well as when you have a more tonnage, you are getting some discounts from them. They have a price policy that if you buy some more quantity, they give you the discount as well as preference. And if you have a long-term relationship, say years on years, then definitely you get the benefit of that. In scarcity also you get the material. And it's not like that every new entrant will go and they will get the material whatever they want.
Got it. Okay. Thank you so much.
Yeah.
Thank you. Ladies and gentlemen, to ask a question, you may please press star and one. The next question is from the line of Anurag Purohit from iAlpha Investments. Please go ahead.
Hi. Thanks for taking my question. I had a very basic question in terms of, let's say, the transformer cost is around 10 lakhs to 12 lakhs per MVA. Then what would be our component in that transformer that we cater to?
It depends on, like, if it is a smaller rating of transformer, say 1000 kV or something, that will cost around 20 to 25% or 30%. If you go to the bigger transformer, it will. If it is a low loss of, there are two kind of transformer. One is of low core loss transformer and one is high core loss transformer. If it is low core loss transformer, then our cost will be somewhere around 35%. If it is high core loss transformer, then our cost will vary from 20 to 25%.
Okay. So quite a significant in that sense. So what kind of makes players like Voltamp and Silchar outsource this work to you? Is it because they themselves are facing capacity constraints in-house, or there is certain moat involved which makes them to outsource to you?
So first of all, they don't have this facility what we are supplying to them.
Okay.
And if one transformer company decides to put such kind of plant, they should have to make the transformer from 10 kVA to biggest rating to smallest rating, which none of the transformer companies makes, because if few companies making power transformer, they make power transformer, they don't make REC range of 10 kVA, 16 kVA, 25 kVA, such kind of things. When you process this material, if you process transformer lamination for the bigger transformer, you will have a material from which you have to process the small transformer lamination also. But if you are making only big transformer, that proposition doesn't get viable to you.
Okay. Okay.
Whereas we all kind of lamination, when we supply, we take last gram of the CRGO as an output, which transformer company cannot get.
Sure. Sure. So our capacity expansion plans in a way also would kind of try to cater to their own capacity plans and the orders that they're looking for next few years. Is that an assumption correct?
1 minute. You have to repeat your question.
Yeah, I was just saying because across the board, some of your clients are also going aggressive on capacity expansion. So our plans are in line with their plans, or
Yeah. As I said, lots of transformer companies expanding their plans because they have a demand. Once they will expand, they will definitely require more and more lamination. And if we are ready with our plant and equipment, we will be able to cater them definitely. And because we are serving them in their old plants, we will definitely supply them in their new plant. And our new plant is more modern than the old plant. The machines and everything, we are buying of the latest technology machines.
Sure. So on the same lines, are there any plans to reduce the client concentration? Because top 5 names are still somewhere around kind of 2/3 of the revenues. And I see some of the names like ABB and Siemens on your website as your customers. So how would those client concentration move going forward?
So that choosing of the client purely depends on what price they give us and what payment terms they give us. This all depends. Sometimes your price is high, so they don't give you the order. Sometimes your price is low, they give you the order. But like mainly Voltamp transformer, we are supplying them since last 23 years, and we do these kind of contracts continuously with mutual understanding, negotiation, and everything. Because these all transformer manufacturers require a strong and robust supplier who can hold their hand anytime. And this kind of relationship, when we develop this with a few bigger companies, We are always hands tied with them.
Okay. And lastly, on balance sheet, I see somewhere around 90 crores of cash, plus you have another similar amount coming from the IPO now. You also outlined in prospectus inorganic opportunities as well. So what would be these inorganic opportunities be in the same product, or you'll go further into the value chain?
As I said, we want to be a hub for the transformer ancillary, transformer components. So we are putting up the new plant as in this transformer radiator plant, which is again a very bottleneck supplies in the transformer. Lots of transformers are not getting delivered because of the radiator. They are not getting radiator on time. So we are putting up that plant. So, and in future we will add up one or two more product, but that is a future plan. So right now I'm not revealing. But right now we are adding up this radiator, and that also will be started from the December onwards.
Okay, great. Thank you and all the best.
Yeah, thank you.
Thank you. The next question is from the line of Tushar Ragatate from Kamayakya Wealth Management Private Limited. Please go ahead.
Yeah, good afternoon, sir, and thank you for the opportunity. So I just want to understand, like in terms of raw material, what would be the price difference if you procure from India vis-a-vis the exports?
No, you said raw material. So raw material we import.
It's 100% import.
Or you are about to sell?
No, I'm saying about CRGO that ship. So it's 100% import?
No. So we buy from the two local companies also, and we import also. Import is cheaper than the local companies, but we have to continue buying with the local companies also. As I say, that in CRGO you cannot pick and choose that today you are selling at higher price, so I'll not buy from them. We have to keep relation with all the companies and continue buying them. Otherwise, when there is a short supply, we will not give us the material. So with these two local mills, we are buying from them. Their prices are a little bit higher than what we are importing, but we are still buying from the local companies also around 15, 20 or 30% of our total requirement. In 70% we are importing from other countries.
Got it, sir. So in case if a government impose any high duty on your raw material, so what sort of, like, how do you see that going forward? Like, your margin might be good going forward in case hypothetical scenario.
Sir, if duty will be more, then our cost will be more and our sales cost will be more. It doesn't affect to our margin because earlier we were used to pay 40% on CRGO.
Mm-hmm.
Right now we are paying 5%.
Okay. So that means your margins, no matter what, there would be no inventory gain, inventory loss. The margin would be maintained going forward, right?
Sometimes you get marginal gain on the inventory when prices little goes up. But no, that's a very minimal, not the highest. Okay.
So why I'm asking is because our business is near to 12-14% gross margin business. So in that, so in terms of working capital requirement, you're increasing your capacity to 3x. Have you increased your funding limit for the working capital?
No. Even if we require, we will use the non-fund based limit because we import everything on the LC basis.
Fair enough, sir. From the last question, as this industry is a fragmented industry, in terms of capacity, if you compare it with our nearest competitor, like what would be the difference in the capacity?
Sir, this question was little bit echoey, so I didn't understand this question.
Okay. So what I'm asking is, in terms of our capacity, like if you compare it with our nearest competitor, so what would be the difference in capacity?
Sir, after the increase of this capacity, we will be at par with our nearest competitor.
Okay. Fair enough, sir. Thank you.
Yeah.
Thank you. The next question is from the line of Shubham Thorat from Perpetual Capital Advisors. Please go ahead.
Thank you for the opportunity. Am I audible?
You are audible, sir. You may proceed with your question.
Yeah.
So few basic questions from my end, sir. The first one being, what is our total CapEx cost for this planned greenfield expansion? And assuming we start operations at that greenfield plant in Q4 FY25, when are we planning to reach its optimum capacity?
Sorry to interrupt you. It's not clear sound. Can you little bit speak slowly?
Am I audible now?
Yeah. Now you're audible.
Yeah. So, sir, I was asking, what is our CapEx cost for this planned greenfield expansion? And assuming we start its operations in Q4 FY25, when are we planning to reach its optimum capacity utilization?
Sir, by the next financial year end, we will definitely reach to the maximum capacity utilization. It's not capacity utilization. With the moment we will start the plant, the installed capacity will be there, but and we will start marketing the things, and we don't want to go too much aggressive because this is on credit basis. So we have to select the customer and then slowly increase our quantum for the sales. So by the next financial year end, we'll be definitely at the peak what we have planned.
Got it. And what would be the CapEx cost for this expansion?
What CapEx cost what?
I mean, what is the costing for setting up this greenfield capacity?
Sir, it will be around what issue we have decided. We have decided on this CapEx plan only. So somewhere around 80-85 crores will be total CapEx in this entire production plan.
I'm sorry, sir, the voice was not very clear. What was the number?
So this public issue, what we decided was we were looking to this CapEx plan only, and these all 80-85 crores will be invested in this CapEx plan only.
Got it. And second question would be, what is the status of that core assembly unit currently? Is it already up and running?
So as I said, that we are going to install in a new plant. So we will place them that machine, we will place PO for that machines, and that's why I'm in China right now.
Got it. And when it could be commissioned?
It will be in December.
Got it. And lastly, sir, what are export margins compared to our blended margins?
So even in this product, export margins are somewhere around 2 or 3% more than the local margin, because in export there are a heavy competition of China as well as few manufacturers in Gulf also. So it's not that if you do export, we get a very extraordinary high margin.
Got it. So export business is actually margin dilutive.
Not dilutive. Compared to Indian market, it is more, but not extraordinary. As in India, we always expect that when you export, you have a very high margin. It's not like that.
Got it. That's it from my end. Thank you.
Yeah.
Thank you. The next question is from the line of Naitik Mohta. Please go ahead. The current participant seems to have dropped from the queue. We will proceed to the next question, which is from the line of Shubh Shah from Ratnatraya Capital. Please go ahead.
Hello.
Hello.
Sir, you are audible. You may proceed with your question.
Sir, can you please shed some light on the competition? So a few key players in the industry and their sizes relative to your capacity.
Sir, you have to repeat your question because first two lines I missed. Your voice is coming in breaking.
Am I audible now?
Yeah.
Yeah. I was asking, can you shed some light on the competition? So a few key players and their sizes relative to your capacities.
Yeah, like our main competitor is there's one manufacturer called Scripps Power Component. He is one of the India's biggest, and there is a one Mahindra and Mahindra. There is one POSCO. These are our main competitor, and their size is like Scripps is processing around 40,000 tons a year. Then Mahindra and Mahindra is processing 25 to 28,000 tons a year, like that.
Understood. And so between all of you, like the organized players would have what kind of market share here?
So I say 33 lakh tons is the total market. Last 3 lakh ton was the last year's total market. So if somebody is catering, say 30,000 tons, means 10% of the market share. So it's all about, so you can say that 50% of the market is with the organized and 50% market is with the unorganized small players.
Understood. All right. So my next question is on the receivables front. So in the past 3-4 years, your receivables have drastically reduced. Was this just on the account of a write-off that was made in 2022, or is it something different?
So you want to know the details?
Yeah, details about how have your receivables reduced so drastically in the past 3-4 years?
Because there is a demand in the market, and we right now we are little bit strict with our payment terms. When there is a demand, there's definitely we will reduce our credit facility and everything to the customer. And recently, in last 3-4 years, transformer companies' cash flow has been improved a lot. So lots of transformers companies like Voltage, we were used to sell at 60 days credit. Now we are selling at 30 days credit. And that is how we have reduced our credit terms to reduce this total debtors.
So going forward, this is how the numbers would look like in terms of receivables. Is that fair to assume?
Sir, if you have to count it like that, 45 days sales must be there will be there in a receivables, 45 to 60 days sales.
45 to 60 days. All right.
44 monthly sales is there, maybe 1.5 or 2 times will be the receivable always.
Mm-hmm. Understood. All right. So when you are doing the contracts, are you thinking in terms of EBITDA margins or something like EBITDA per ton or EBITDA per kg that is being optimized?
So we work out our costing on the per kg basis for the different grades. Then we work out what we have to see who has imported what material, what our competitor has, what kind of grade imported in last month, before that month, who is his client. And there are lots of propositions. We have to work it out, what kind of material is available in the market, what kind of not. Then we decide as per our grade, our prices, and then we do the contracts.
Understood.
There are lots of market study before we do the contract or before we sell our material.
All right. And just last question from my side. How much time does it take to manufacture one unit in a general fashion?
As you say, we are producing 1,000 metric tons a day in a year, so must be around 40 to 43 metric tons every day we are producing. So it depends if somebody gives us the 10 tons course, and if our machine is free, we can give the delivery in 1 day. And if our production is planned for 15 days or 16 days, we are giving them the delivery schedule for the 17th day.
All right.